Hey, Bubba Trades! I wanted to do a video analysis update on some stocks that institutions have been buying Strangles and Straddles on. I think most of the stocks in this video are going to be Strangles. The only one that wasn't on these screens is going to be WP Carry. So one that was on before, probably not being bought with Strangles today on a 20% update when there's going to be a large spike in implied volatility. We see Starbucks enters this wave 3 of wave 3. Very pretty. 1, 2, wave 3. Highest high on the RSI. Shallow wave 4. And a wave 5 higher wave 1. A, B, C, wave 2. So in the larger degree, what's that all mean on this larger degree? Well, Elliott wave is fractal in nature. So eventually, even without going into this next degree, the wave theorists believed above that low, which was 68.39, the length of wave 1 placed at the wave 2 low was going to be met for wave 3. That target is 144. Now that's the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed at the wave 4 low, a shorthand way to get this long-term target is taking the entire length of wave 1 and just placing it at that wave 1 high. That gives a long-term target of about 200. So, one of the themes that we've been seeing in the market is this rotation, this big rotation, right? Everyone's talking about it by now, and they're right. They should be. We've seen real estate outperforming. We saw Nvidia correct and hopefully give some money to the rest of the market. And I've given my analysis that I think the bulk of that Nvidia correction is over, and I've explained what I'm going to do in a previous video. But a lot of people have been saying it's the dash for trash phase, and I've kind of been like, well, Starbucks and a lot of these stocks in XLY, the consumer discretionary sector, we actually used to think of them as blue chips, right? Best Buy, Target, I know Disney has been taking a while, but for Starbucks at least, it does seem like we're getting that consumer disco groove back in the market. I'm looking at Tesla, I'm looking at Amazon. We're going to talk about Home Depot in this video. The length of wave 1 placed at the wave 2 low on this next degree. So this is the smaller degree. The length of wave 1 placed at the wave 2 low takes Starbucks to 118. Now we can get a little more precise with this wave 3 target, because wave 3 is actually usually a little bigger than the length of wave 1 placed at the wave 2 low, and it also has this characteristic where we've got this impulsive gap. So one of the principles of wave theory, the wave personality, I believe that it's called, is that wave 3 has gaps, big old gaps, big impulses. In the bearish direction, wave C is the one with all the gaps. So this does look like a wave 3 in progress. 130 looks like it's that 127.2% extension. I'll make it perfect, just what the heck. 115.48 and 68.39. Was it really 118? No, 115.48 and 71.55. So that's going to give a perfect wave 3 target of 131.45. I still like knowing the minimum wave 3 target, which is the length of wave 1 placed at the wave 2 low. That's 118 before Starbucks consolidates a bit into wave 4 and a wave 5 higher. Of course, the good thing with Starbucks is it's a dividend payer, a growing dividend payer. And let's get this rectangle out here for this wave 3 target zone. There we go. Very clear. So picture perfect for Starbucks. Let's see some other stocks that institutions have been buying straddles and strangles on recently. This was taken yesterday, so I'm going to go into Papa John's. I'm going to go into Home Depot, and Palantir and previous picks Visa looking very well. Look at all these Nvidia readings. That's going to be something we see play out as well. AirBNB was on that screen, and there is a little bit of yield max magic going on where they've got this this ETF approved before the first dividend date, right? Right before the first dividend of ABNY. So what's this ETF doing? I always like to remind these ETFs don't actually own the stock. So that's kind of a big thing. They get their exposure through options. So I sometimes view these ETFs, especially when they're delta neutral, as investments in the options market itself. So if the options market goes down, these ETFs are going down, right? So if Roaring Kitty is right and all the GameStop and AMC bulls destroy the CBOE, that's not going to be good for yield max. Anyway, that's one reason I own AMC. I'm not even going to play. Anyway, so yeah, when people talk about destroying the financial system, the yield max ETFs aren't gonna like that because they don't actually own the shares of these stocks. They don't actually own shares of ExxonMobil. My investment in XOMO isn't backed by those big oil rigs. Anyway, we see right here they've got the 110 call and the 110 put for 1018. That's how they're getting their 100 delta exposure, and then they're selling this out of the money 240 strike call for 816 on Airbnb. It looks like that's going to expire worthless, and I believe this ETF has collected dividends for about say 5 or 6 weeks. Don't quote me on that. Very easy to figure out how long this has been collecting premium before the first dividend payment. Let's look at Airbnb. They're buying Strangles on it. A huge dividend's probably coming to ABNY. Let's look at the wave theory and see if this is really just a lot of guessing and coincidence going on. I'm going to make this a large wave 1 from the IPO. And this is, they could be wave 1, wave 2. And then this is an ABC correction. I'm gonna make this real pretty. It's a really, high beta, but Airbnb, surprisingly not too bad fundamentals. They've got, let's see, 4.42 earnings per share, nice annual income in the millions, annual sales, almost 9 billion, annual income, 4.7 billion, and we're still seeing, even with these corrections, it's priced for a lot of growth. Book value 9.23, book value 7.47. I was looking at Zillow too, a little similar. Is Airbnb a real estate play or is it a growth stock play? What we've seen play out is that magically, because of possibly these interest rates, that we've seen real estate going up, and some of even the bond ETFs going up, being correlated with growth. So it's hard to tell if Airbnb is related to real estate or not over the long term, because I think we're going to see both of them rally together. We'll get into that in this video. Realistically, most of the, some of these ARC stocks have very specific fundamentals, like Palantir, like some of these software stocks that try to be unicorns. I think Airbnb definitely fits the description of a unicorn. So, and it's going to have really high option premium, most likely, especially if it enters a bull market for this covered call ETF, this out of the money covered call ETF, ABNY. What I do when I like these setups and stocks is I buy the main yield max ETF, and then that's most of the position, and then I blend it with common stock of the underlying. I like about a 33 to 67% ratio where the common stock is about a third. It helps minimize the decay, but when these stocks go on big bull rallies and the out of the money options are always getting exercised, what we tend to see is that the premium is going to start being priced into the call premium, and so the dividends are going to get massive. We saw NVDY's dividend get to, over 100%. CONY's has been over 100%. They're buying Strangles on MicroStrategy right now. That one might be above 100%. I own that MSTY one as well. So anyway, looking at, and I own a BITO. We're seeing a crypto come back a little bit today. They're buying Strangles on Clean Spark. We can get into that. But just looking at AirBNB. Wave 1, wave A, B, C correction. How do we know it's an A, B, C correction? The length of wave A places the wave B high. Wave C ends at that 127.2% extension. And then 1, 2, 3, 4, 5 waves from the low. Wave 1, wave A. This should actually be the same degree. This dramatic ABC correction swinging down, and people still say they don't believe in wave theory. When you see these big dramatic corrections like that, like what else could that be? Of course, there's always an answer to that question, but we're seeing a lot of this all over the market. 170.00. I think ABNY is going to start to see those total returns pick up on the blind average test. 81.91. We're having a real party over here. The length of wave 1, place of the wave 2 low, gives a wave 3 equal X target of about almost 200, 199. Measuring this ABC correction, we see right there, it ends between the 127.2 to 161.8% extension. That's when wave theorists can go get another useful downside level. 140.82, 155.66. Yeah, so 107.43, that's a little tight for Airbnb's high beta. We can look at the volatility. One of the reasons I like ABNY is because of Airbnb's volatility. I think the best invalidation is 100.76. That's a little wide. I'll show where I get a slightly tighter level. This wave 2 low, 133.55. I gotta connect it to that, or the purists are gonna come out. Why do I have to call this a leading diagonal? Because we can see a wave 4 dramatically breaking the wave 1 high. It's gotta be labeled as 1, 2, 3, 4, 5 waves as a diagonal when wave 4 is just destroying this wave 1 high. Like this, but we still see 1, 2, wave 3, highest high on the RSI. ABC wave 4, wave 5 ends with Momo. Does it end with Momo? 69.22, 69.11. Wow. 100.76, we did get Momo. 103.55, tighter level. And then the tightest level is going to be that 107.43 level. So that is Airbnb. That's why they're buying Strangles on that. Home Depot. I want to get into just the short term for HD. We've seen a lot of these home builders. We've seen a lot of these home builders like XHB go break above this high. And this is really, I pointed out this being a big leading indicator for real estate. Look at this. Perfect. Perfect on XBH. Perfect. Perfecto mundo. I'm telling you where the housing market is going. Wow. Look at that. Perfecto mundo. No need to otra vez. Intento otra vez. No need to otra vez. Perfecto mundo. But I do need to get better at Spanish. Anyway. Yeah. So XHB, leading indicator. And I also had KBH. Bang. I mean, how many of these people they just get bored one day and they start fear mongering the housing crisis? Look at this. How many of these people on FinTwit, they just get bored one day, they need to engage their subs, they start fear mongering the housing crisis. Leading indicator in KBH, leading indicator in XHB. Now look at Home Depot. I think they're buying Strangles on this. I think there's a little bit of a leading indicator for Tesla, for, this is a little unrelated to Home Depot, but it's in XLY too. So I'm going to count this out. I like this daily view. This high is 396.87. This low is 274.26. I'll subdivide this right now. Look at this very clean RSI. 1, 2, wave 3, highest high. Wave 4, retest the 50 like I talk about. Wave 5, ends with momentum divergence. Getting used to seeing wave 4, always retesting that 50 on the RSI. After wave 3 makes the highest high, then wave 5 ends with momentum divergence. That's kind of the checklist. 298.01. So why are institutions buying Strangles on these stocks? Well, I believe they're using these options to make delta neutral positions and accumulate these stocks. And you'll notice a lot of the stocks we're going over pay dividends or have ETFs that sell option premiums, so they also pay dividends. So when institutions take delta neutral positions at the right time, they buy married puts, stuff like that. It's a sign that they might be trying to accumulate stocks. And we notice with a lot of these stocks, what's the theme? They're not on a lot of retail investors' radars. I mean, are they? That's kind of the idea, right? So that's when the institutions are buying these Strangles and Straddles. I look at the stocks and all of a sudden you notice they're at the 61.8 to 78.6% retracement of a 5 waves advance, and they have a leading indicator that's already gone very highly correlated in an XHB and KBH home builders going and reaching those equal legs targets. So it's like, it's almost like the institutions are about to rotate into Home Depot and play follow the leader. And that's what's really going on during these late July, early August VIX spikes, during the September quad witching VIX spikes. Anyway. So these aren't even really the Strangle screens aren't the magic screens. They're the sophisticated ones. I really like the Strangle screens, but they're not the magic screens. We'll get into those. I've got some screens only a fool would give away for free. I like this tight, 321.10. It's tight, but that is the proper way to go about it because we're on this smaller time frame. Even just kind of looking closely, get your little Rorschach test. I know it's kind of hard to see on these daily counts. 1, 2, 3, 4, 5. Wave 1. Wave 2. And then this is a wave 1 and a wave 2, in my opinion. So I like 321.10, and then I expect we're going to see Home Depot enter wave 3 of wave 3, earnings out of the way. Looks like XLY might want a little midsummer rotation before the fall. So the daily counts, time frames wise, always important to remember. The monthly and the weekly, when I'm looking at the 5-year time frame and I've got on the weekly, that's my preferred long-term investing time frame. When I'm on the daily chart like this, everything gets a little tighter. The stops get a little tighter, but also the time frames get a little tighter for when these moves are expected to play out. So the stock market is always a lesson in duality, of course. And so these smaller time frames, the stops are a little tighter. And Home Depot is really more of a long-term stock for most people. The length of wave 1 places the wave 2 low. I think it's got leaders. I think it's got friends in low places, and it's going to be a friend in a high place soon, going up to the 440s, the 450s for that minimum equal legs target. I've kind of shown a little bit of the path to get there. So that's Home Depot. I like it above 321.10. Another dividend payer. It's all about the dividends. Dividends aren't everything. They're the only thing. I pity people that live in these states that there's so much state income tax that they can't focus on dividends. It has to be all capital gains that's never touched. I mean, and then that's when their CFAs are only talking about taxes. And you get it, because it's like, yeah. I mean, if you live in one of those super high tax state income states, like, yeah, it is all about tax efficiency. There's 7 states with no state income tax. Is one of them worth living in to collect massive income and positive total returns from these ETFs? I thought the answer was yes. But I lived in them my whole life, so. Anyway, WP Carey. We're seeing real estate run away. I mean, I've got one of these screens up, but this is really the biggest screen in the market. This is one of my favorite screens in the market right now. Investing REIT stocks and then going by earnings. This is what gives me nightmares. Like this is the type of thing that a man sees and they're just like, I need to really get things together. Because looking at the charts of a lot of these stocks, sorting by the highest earnings per share for the trailing 12 months, a lot of these stocks look very similar. And one by one, they're all running away. And they've got really scary names for people who are complaining about real estate prices and housing prices and inflation. This is called Mid-America Apartments, right? So you're one of those people that's complaining about inflation and you're going to vote based on inflation. Buddy, I got news for you. The stock market already knows what's going to happen to inflation. Does that mean they know who's going to be president? I've gone over that. But Mid-America Apartments is running away. Okay, maybe it's because they achieve economies of scale because interest rates go down and so rents are going to stay lower. Maybe rents are just going to keep getting jacked up And real estate, it's a safe haven. For some of these rallies, it's an interest rate fall in play, but eventually one day we wake up and rents are high as shit with everything else. This company is called Mid America Apartments. I personally will just tell you, I don't look at any of the stocks on this screen, and I don't see them as speculative investments. I know that's like an odd thing to say, but I have upside exposure to real estate. Every time I see one of these stocks going up, I don't think, oh, I'm making money. Like, I really don't. I think like, oh crap, like real estate is getting more expensive. Rents are going to get more expensive. It's upside risk. I legitimately don't view these as speculative assets for me. Just, I know that sounds bizarre, but that's because I'm exposed to this. If I own many properties, it might be a different way. But this is the screen that should be giving everyone nightmares. Simon Property is looking like a big leader. I predicted that one well. Mid America Apartment, and they're getting fast. I mean, look at what's happened to TLT recently. So for me, it's all about finding these laggard real estates that are the highest quality, that haven't taken off yet. Some of the ETFs themselves fit that category, but Mid America Apartments, getting quick. I mean, that's a scary name. Mid America Apartments, getting quick. That should be. That's the last thing someone hears before, Yvonne's laughter and something is cocked. Anyway, wave 1, wave 2, wave 3, wave 4, wave 5, wave 1, wave A, wave 2, wave B. This is WP Carey. It's not only a great business school, I believe it's going to be a follow the leader play. It hasn't really moved much, but we look at this. Let's measure this ABC correction. I'll bring that in. Yeah, yields are crashing. So whenever yields like rally, no one ever said, like, everyone's like, yields are surging. Yields are surging. When like yields are crashing, like, where is that? This is the crash people should be talking about. The yield crash. That's the crash. And Starbucks is a great example of that. If I was someone who drove a lot and I was in a state where gas prices were rather high, I'd view a lot of oil stocks that way too. I'd be on this screen. And if I got a 40-minute commute to work and I live in a place that's on the blue side with gas prices, I'm going to be looking at these oil stocks right here. I'm going to be going to fundamental, highest earnings per share. I mean, and this to me is a list of stocks that it's a little different because it's oil, but especially with the high dividend paying ones, it's just an example of upside exposure and how everyone has different levels of upside exposure to different sectors. This low is 67.77. This is 89.663. $85.94. So that 161.8% extension is going to be the stop. And that's a good one because this is a rather low beta, kind of quote unquote safer vehicle. What's that mean? Well, it's got a lot more fundamental backing, right? Price to book 1.44. Price to sales, price for some growth, the beta is 0.92. and it pays an 8% dividend. So that kind of helps it be a little more of a hold. So the consolidation isn't a bad thing because they're going to move slower. But at the same time, making lots of money on real estate is kind of like making a lot of money on gold and silver. Making money on a rock. Making money on a house. A building. As opposed to a Chinese video game company. Anyway, the length of wave 1 places the wave 2 low. Gives a target of 102 for wave 3. Ay, ay, ay. MCHI. Let's look at this screen. This is China. We go to one of the magic screens, but it's not really magic because it's got a pretty delta neutral bias, at least I think. MCHI, 1,358% unusual options volume. About a $57,000 straddle, or contract straddle is bought. Let's see what's going on here. That sounds like someone thinks this ETF is about to have a crazy move. Why would the Chinese stock ETF have a crazy move? Look at this. What in the world is going on here? This is a pretty creative strangle that a very rich person put together. 12,825 contracts for November, election season, post-election. We got for the 44 strike, and also way out of the money for the 49 strike for MCHI. And that's paired with the 12,000 contracts of the 40 put. This guy's rich. This guy's got a lot of, that means he probably has a lot of shares of this. Unless he really just likes gambling. Let's see. Let's find his puts. That's one leg. This guy is nuts. Whoa. What? Okay. Yeah, this guy's crazy. This guy might actually be crazy. He bought 12,800 puts for $6 a piece. So this guy must have a massive amount of shares if he's making this bizarre delta neutral position that is based on very far out of the money options. He's got a big calendar going on. This guy, this guy might have. Yeah, this guy might have been on something. He's rich though. I think he's got a lot of shares, but he needs a big move. He needs a big move. Or she. You never know. I bet Joanna's going to be making billion-dollar option trades like that one day. But definitely because a certified financial advisor aided her, and not because of a YouTube channel. 35.58. All the money's in selling options through ETFs without assignment risk, and that sounds too good to be true. It's just another strategy. There's no free lunch in it. But there are ways to get dividends from China. For Alibaba, they have this new ETF, BABO. So I can update Alibaba. I'm interested a little bit in blending shares of Alibaba with Babo. I already own shares of Alibaba. Huya, I'm basically at my cost basis there. We look at MSCHI. I call it Elliott Wave. Yeah. No way. looking for something like that. 35.58 invalidates. And have a great Tuesday afternoon and the rest of your week.